Hello. All right, welcome back, everybody. Ed Ponsi here, your FX educator here on behalf of FX Street once again. And happy Valentine's Day to everybody out there. We certainly love FX Street, and I love speaking to you here on this channel. So I enjoy that. And I hope you're enjoying it too. So if you have any questions, please feel free. Type them in and ask away, and I'm more than happy to try to answer any questions that you may have. So feel free. Let's get started. I'm taking a look at dollar CAD here. Dollar Canada, it really looks to me like descending triangle, if I look at it this way, right? High, lower high, lower high. And at the same time, there's an awful lot of support right here. It looks like it's right around 130. We've certainly got some wicks. Now, strictly speaking, if you wanted to put it to the bottom wick, you could say 129.65, but I don't always take the wicks into consideration. The bodies mean more to me than the wicks, and people wonder, well, why is that? Why would the body mean more than the wicks? Well, you can see that there's a lot of support at 130 from the wicks. What happens every time the price gets below 130? All right, clearly they find a buyer every time. So, all right, just a second. Somebody's asking a question. How many? Okay. I assume that the sound is working fine. I know somebody was having trouble with the sound earlier. I'm assuming that the sound is fine. Hello there, Carlos, Hytham, everybody. All right. Let's get, so there's clearly a lot of support here, but this could give way, right? This could break. And if you make it weekly, you want to go back, I mean, there's your candlestick pattern on the weekly. Is it a head and shoulders? I think that's a stretch. I think that's a stretch, right? So, but let's go back to the daily and maybe even go to the 240. So really, what's the play here? The play here is certainly not to, if you wanted to short it here, you could be right, but you're betting that support's going to break. I'm thinking I would like to short, I prefer to short a rally as opposed to just selling short at the current price. I mean, if you sell short here, right, you see this trend line? Rally up there first, and then you'll be shorting at 131. I would much prefer that, because let's say if I'm shorting at 131, right? So let's say I want to short it here. I'll put a green there for entry. That's what I'm hoping for. Why? Because if I short it here, I'm shorting it 30 pips ahead of support. The actual price right now is 42. So I'm 42 pips away from support right now. Now, when I see 42 pips, people are going to say, well, Ed, don't you want to make the 42 pips? I never assume that I'm going to get all 42 pips. I look at a potential trade and I say, well, if the potential profit is 42, would I be happy with half of that? Because I never assume that I'm going to get the whole thing. I hope that makes sense. Right? So if I can short it from here, what's the potential profit? From 131.00 to 130.00. Potential profit is 100. Would I be happy with 50? Yeah, I might be willing to take this trade for 50 pips, but I'm definitely not willing to take it for 21. There's simply not enough reward to justify really any amount of risk. You want to go 3-to-1? That means your stop has to be very, very tight. And having a very, very tight stop means you're probably going to get stopped out. So instead, I look for room. Okay, I look for room to move around. Okay. All right. So, and so that's the lower high, but within that lower high on the lower time frame, 4 hour, 131 looks like the place to take a shot at this to sell short. You would be betting on dollars, you would be betting against US dollars and on Canadian dollars. But remember, that goes into our theory that we believe a head and shoulders may be forming on the US dollar index. So you'd be shorting US dollars. It's perfect. From that standpoint, it's perfect. It's quite an interesting chart on the 4 hour, but you can clearly see the lower highs, and everything is slouching towards 130. Okay. Okay. Carlos in the room. Good to see you, Carlos. Carlos says Aussie New Zealand comes back to the 10 EMA. I'm going to take a swing at it. So let's take a look at that one next. But just to finish on this one, if I have 100 pips potential gain, now I can place a trade with a 30 pip stop. And you're really not going to see me place a lot of trades with stops that are closer than that. It just doesn't happen in my world. Placing a stop 10 pips away really doesn't make a lot of sense to me because the spread becomes a bigger part of the trade. We don't want the spread to become overwhelming, right? The spread itself doesn't get bigger, but on a small trade with a close stop, it becomes more detrimental. So I'm willing to take a shot at this with a 30 pip, 25 to 30 pip stop, 100 pip target, maybe not 100 pips because I'm going to get out before 130. I'll probably get out at 130.05 because it's a huge round number. So this will become a target right about here. I like to make the targets blue, entries green. And this is just a thumbnail sketch. I'm not, you see this peak right here? That peak is about 130.15. This peak here is about 131.50. That's too wide. So for now, I'm just going to say 131.30 for a potential stop. Entry stop and ultimate target. Go down to a 60-minute. We can zoom in on this. Right? I don't need that. Now, having that stop all the way up at 30 doesn't seem right to me. This seems right here. I just need to be above this guy right here. You see that peak? That peak is 15. Okay. This is resistance right here. So is this. That is also resistance. I'll go above those two resistance levels. I can probably get away with 25. So it becomes 4-to-1, not quite 4-to-1, reward to risk. Let me clean up these numbers a little bit. Okay, so 95 profit versus 25 risk I can live with. I might go higher with the stop could be 30 or it could be 25. This is just a general rule of thumb. Another target might work right about here. You see this area of resistance? That's right about 75. It's really 76. We'll call it 75. If I set it up this way, then I have 1-to-1 for the first part of the trade and better than 3-to-1 for the second part of the trade. If I can simply hit the first target here, right, that's my first target. So we'll call that T1. And T2. Entry. And stop up here. So I've got target 1, I've got target 2, and but the entry is green. So I don't mind entering on a round number. I just don't want my stop on a round number. Entries on a round number are okay. Even targets on a round number are okay, but I'd prefer to have my target above the round number, just a little bit, like we do right here. Makes a lot of sense to me. Why do I like multiple targets? Are you ignoring the level at 130.65 to short against? It's not enough reward. So yeah, I am ignoring it because it's not enough reward. That's a good question. It's a fair question. If it can't get through, if it can't get up to here, if it can't get all the way up to here, then to me the playing field is too small and I simply won't take the trade. Do I think price will go through? That's also a fair question. I don't have any idea if price will go through. All I know is entering anything less than this from here to here isn't really worth it for me. I like to shoot for 100 pip targets because I'm assuming I'll only get halfway there, right? But if I'm shooting for a 60 pip target, then I'm assuming, well, would I be happy with half of that? And the answer to me is no. You know, it's not enough. And then the risk reward, right? If my target is 60 pips or my potential gain is 60, then my stop's only 20. I don't like having a 20 pip stop. It's too close for me. I like to spread things out a little bit. Now, remember this. I'm not telling you that you're wrong. I'm just telling you what I do. Okay? So you might be right. Your trade might work just fine. But I'm not, I like to set it and forget it. I don't want to sit in front of the computer. I mean, it's Valentine's Day. I'm not going to sit in front of the computer all day. But if I can get my price, then I'll take the trade. And my attitude is, I'm either going to get it at my price or I don't really want it. Great questions, by the way. Excuse me for 1 second. I'll be right back, and then we're going to get to the Aussie. Hold on for 1 moment, please. Apologize for that. Okay, we're back. Now, Carlos was talking about 10 EMA on Aussie New Zealand. So let's go to the daily. Let's go to AUD-NZD. Wow, this thing's a rocket. Look at that thing go. Aussie's crushing New Zealand. And probably because copper is really on a tear. We'll get to copper in a second. A pullback to the 10-day very well could work here. The price is not bouncing off of the 10-day, but it's extended so far from it that it might be difficult to get it back to the 10-day. But I think it might be worth a shot. Do you think we could get it to 111.40? It's a good question. You know, the area that concerns me on this chart is look at all these wicks. The price is being rejected out of this area, you know, on a fairly regular basis last year. Where is that area? Let's try to define it. Let's say that it begins at around 107.30. So a pullback to the 10-day would have me buying at 105.50. I would be looking to get out of some of it at maybe 125, because there's so much interference here. Let's put it this way. One of my targets would be under 107.30. But if it can make its way through, then there is a lot more upside. Look at ultimately, that's above 112. I mean, it could get up here. I think this is where Carlos is looking. 111.40 is right around here. And there's definitely a lot of activity. I would say here. I'm looking at this. And again, Carlos has been killing it, so far be it from me to say he's wrong. I'm not saying he's wrong. But this is what I see. 110.50 is going to be a problem, I believe. 107.30 and 110.50 look like trouble. So, it has to pull back. Can't buy it here. You're way too close to 107.30. If you get pullback, then these two targets come into play. Perhaps a third target here comes into play also. And if you want to say a fourth target, way up here at 112, just under 112. You can see this area up here was a big reversal, and it happens right near a round number that says 112. So you know me, I would go out at 111.90 for one of my targets, perhaps. These are all potential targets. There's another one here. You see this area? That's right around 109, so I'd probably go a little under 109. Call it 108.90, just for giggles. That's not a very strong area, by the way, but it's there. Call it 108.90. A lot of, it's kind of messy right here. That's what I'm looking at, but this is the big trouble. This, to me, would not present as much of a problem. This might present a big problem, this 110.50, just because look at all the activity there, and you know it's fairly stable there. And then my final target, fourth target, is the top of this, which is really a double top. Let's put it right there, just under 112. And for the very greedy among us, shoot for the moon, 113. I don't shoot for the moon. But I'm not going to tell you that you're wrong if you do. It's just not my style. I play a very risk-averse game. And I figure, what's wrong with 111.90? I mean, that's a beautiful target. So I wouldn't use this. I'd use this. And this. Maybe this. And definitely this. That's the worst one. Great. I like the way you're thinking, though. It's extended from its 10-day. And I'm using a 10-day exponential moving average here, just in case you're wondering what that is. It's extended a bit too far for us to say, that very often when it becomes extended very far from the 10-day, it does work. That's what Carlos is referring to here. Because right now it's so strong, it can't even, it's just far above its 10-day. It's a real sign of strength. What's going on here? Copper is very strong. Iron ore is very strong. And those are two big exports out of Australia. I think Aussie, fundamentally speaking, is about to have a really good year. This is the chart. Copper's down a little bit today. And again, my opinions on Aussie are just that. They're just my opinions. We've popped through there. It's stalling out a little bit. One of the good things about this breakout is that it happened on high volume. You see that? Right there. What happened here? Three things happened. But one of them, interestingly, happened right before the breakout. And that was a strong trade balance number out of China. I mentioned that before. But what I did not mention is two of the three biggest mines in the world are in, let's just say, interesting situations right now. There's one in Chile called Escondida, the correct pronunciation, Escondida, in Chile. It's in Chile, and it's owned by BHP Billiton. By the way, BHP, not quite as strong as the copper chart. Back to copper. It's owned by BHP Billiton. Why is it not quite as strong? This mine is on strike. It's the big mine in the world. I'm sorry. Biggest copper is on strike. That's in Chile. The third biggest copper mine is owned by this company, Freeport-McMoRan. That also, that kind of looks like the chart of copper, but not quite. The triangle becomes a lot more messy here. But I still think this is good. Freeport-McMoRan owns the third biggest mine, which is in Indonesia. The name escapes me. I think it's Gadesh, but I'm not sure. Anyway, Freeport has decided to cut production at that mine. And there are fears of a shortage now. So copper's not up today. It's not doing anything today. But overall, very impressive performance. I like the fact that the breakout happens on high volume. And that's one of the advantages of... Oh my gosh, sorry about that. That was awfully loud. I gotta turn that down. It's maxed out. Sorry about that. Anyway, I think copper is about to have a big year because, like, you look at that chart, right, and you say, Ed, it's already run. Now look at the weekly. It could go a lot farther, right? It could go a lot higher than it has already. Where would you look to trade pound from the bad CPI data? That's interesting. U.S. had very strong PPI, by the way, if you missed it. And but the pound itself, I don't like pound dollar right now. I like pound euro because I think I think the risk reward is better on pound euro. Let's get rid of this chart. This looks like a pretty big head and shoulders to me. That's on the daily. You can see it on the weekly also. It's euro pound, and so I've really got my eye on this one because we have all these elections coming up in Europe. I'm just a little skittish about euro in general. I don't want to hold it over the weekends because we're going to see elections and polls very soon. And but pound dollar, just to pull up the chart, that's the daily. It's obviously way on the daily, on the weekly. But on the daily, I mean, this is just gone October. You know, it's tried to get 127, 128, but it keeps falling back, and it's just been disappointing to trade from my perspective. I was looking for a big rally on the breakout here because it came down so fast, but it just hasn't. It hasn't happened. I think the risk, though, I mean, people worry about Brexit. I'm going to throw a thought out there at you. What if Brexit had never occurred? The EU could still break up. Still fall apart. Even if Great Britain had stayed in, the possibility exists that the EU could still break up. We are going to have elections in France rather soon. I'm already seeing the polling data. I don't know if the polling data is accurate or not, but I know this. The euro is going to start jumping around the polls. It's going to start gapping. And this chart is awful. It's just a whole lot of nothing. I see nothing on the pound dollar chart. I'd rather take the euro pound, and you know what I'll do? Close trades over the weekend, and if I still like the trade after the weekend, reopen them, but close them on the weekend. You know, Carlos, and I'm going to leave it on this thought. Before I forget, Yellen starts speaking at the top of the hour. Janet Yellen in 27 minutes. Prepare for volatility. I'm just going to say this. I'm not going to make a specific recommendation because I don't think it's the right thing to do. But I'm only a U.S. citizen. That means there's basically like 3 brokers I can open an account with. So if I have a choice of 3 brokers, you know what I'm going to do? I'm going to open a demo at all 3, compare the spreads, compare the fills, compare the platforms and the charts, even compare the customer service, right? Bother the customer service people a little bit and see how they react, you know? And That's how I would decide. I don't see a huge advantage. I can't, and I'm not really, even if I did, it really would be wrong for me to make recommendations because I know that I don't trade like everybody else does. And, I'm a longer term guy. And, I don't know any, I've heard no complaints about Oanda or Gain or Thinkorswim. And as far as I know, those are the only three places to trade Forex if you're an American citizen. So what I would do, open up, try to demo all three. That's what I would do. Okay, gang. Hey, happy Valentine's Day, everyone. Thanks for listening. I'll see you on Thursday. Have a great day.